This meeting between Xi Jinping and Saudi Arabia should be at the forefront of every person's radar. It's going to change the dynamics of oil and gas forever. Okay. And so I'm going to be discussing that and also the fundamentals of oil versus what is actually happening. I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in oil and gas sector, oil and gas news, this is the channel for you. This meeting between Xi Jinping and Saudi Arabia says to the world, Western influence, the American influence on Saudi Arabia is over. Okay, when push came to shove, Saudi Arabia said, we don't need you anymore, America. Okay, and that is so big league for the oil and gas industry. Okay, and I'm going to be talking about that. But here's the deal. Oil prices right now fundamentally don't make any sense. Brent crude's at $77 per barrel. WTI is $72.42. Now, here's the thing. Fundamentally speaking, oil should be well over $100 a barrel. But what is going on? People are buying into the fear. All these commodity traders, all these oil traders, all these financial traders that buy and sell oil, they're the ones that determine the price of oil. And they're the ones that got hurt the worst. To go from over $100 a barrel down to 70, a lot of these oil traders are getting hurt. And a lot of it is the agenda to reduce oil prices. You think about it, oil prices have dropped. Although oil demand has increased, and although we've seen a reduction in oil output, we have lowered oil prices without increasing oil production. That has never happened before. This is the first time they've been able to accomplish this. They're doing this by using the Western propaganda machine, by getting the news to parakeet. We don't need oil anymore. Global warming is because of oil. Our green energy is going to replace oil. And the fear of a recession has caused the lowering of oil prices. They used the news because at the end of the day, if let's say oil demand doubled today, you would think oil prices would double today as well. But if the traders are not buying it based upon the fundamental news, then it really doesn't matter what happens fundamentally. There is such a gap between fundamentals and the oil price right now. It makes no sense. In addition to that, there's a tremendous amount of confusion. The Ukraine war and the EU embargo and the natural gas to oil conversion because of the Russia cutting off Europe from oil and all of the natural gas and all of these things. And Russia's still selling a tremendous amount of oil because India and China is bypassing the sanctions. Russia's been able to get around the maritime control and so on and so forth. So there's a lot of confusion. So it's driven oil prices even lower than they should be. Okay. And so then you got news articles, the JP Morgan's Kolonovic, sell oil stocks now. Investors should use the divergence in the performance of oil stocks, crude oil so far this year to sell energy stocks in the near term. Marco Kolonovic, JP Morgan's chief global market strategist, says, still bullish on the energy sector. And longer term, believes that share prices could soon start to drop. He told clients, recommendation note dated Thursday. Okay. So you've got many market strategists like the guys for JP Morgan Chase suggesting to all their clients, hey guys, sell. Okay. Now, there could be multiple reasons why he said that. Is it simply because he really cares about his clients? Is it because he's setting the stage to drop oil prices so he could go and buy more? Because he's got information that nobody else has. Okay. Xi Jinping is buying oil at a perfect time. Is there a coincidence to that? Okay. I truly believe that Xi Jinping, the Biden administration, they thought they were brilliant because oil prices dropped, but China was helping in all of those things. Okay. Because China was planning to close one of the largest oil and gas deals in world history with Saudi Arabia today, while oil prices are the lowest they've been in 12 months, which makes fundamentally speaking no sense at all. Okay. Is it a coincidence? Okay. Xi Jinping is a prudent businessman and he wanted oil prices to drop. And that's probably why he caused all these COVID lockdowns. Xi Jinping is a selfish man, at the mercy of his own people, and at the mercy of his constituents and his allies. He wanted to get a good deal to buy a massive amount of oil from Russia and Saudi Arabia. And so he manipulated his own country to reduce demand so he could save billions and billions of dollars. If Xi Jinping does it, so does guys at JP Morgan Chase, Bank of America, the Federal Reserve, to take advantage of the situation. They use news to do that, okay? And so think about what Biden is doing. The whole left is sending the message to the world. We are in a recession. Global warming is in full force. Green energy is going to replace oil, and anybody that uses fossil fuels is evil. And so that message is also causing oil prices to drop, and they use it to get votes. The midterms, it was very clearly illustrated that, in fact, the left requested that Saudi Arabia wait to announce the curbing of production by 2 million barrels a day after the midterms, because they knew that it would be detrimental to getting more votes for the Democrats. Okay. And so they used the news to manipulate oil so they could stay in power. So the banks, large corporations, Xi Jinping, Joe Biden, all of these power brokers are using information in news and financial instruments to keep oil prices down. But now that China signed this massive deal with Saudi Arabia, now, and you think about the timing, Xi Jinping is so prudent. He knew that this would be the time to buy. Because you think about it, he had planned this out months ago to meet with Saudi Arabia to sign these agreements. How did he know that oil prices would be $70-something a barrel? I mean, Jeff Curry, an oil analysis for Goldman Sachs, thought oil prices would be around 120, 130 during this time. So why would Xi Jinping want to sign a contract while oil prices were $130 a barrel? You got to think about this. Xi Jinping knows a lot more, or has a lot more influence and control. I mean, these analysts don't have control and influence. These large banks and these large businesses don't have the influence that Xi Jinping has. So what is he doing? What strings is he pulling? You got to ask yourself, is he that brilliant, or does he have more control than what this world really realizes? Okay, so here's my point. Now there's absolutely no reason to keep oil prices down anymore because he's got these contracts in place. And so I think what's going to happen, we're going to see the EU embargo kick in December 5th that already started. We're going to see the Strategic Petroleum Reserve release end at the end of this month, December 31st. We're going to see there's confusion about whether this oil price cap on Russia is actually going to work or not. There's many maritime guys that say that we control the seas and we can enforce it. And there's many that say that it doesn't matter. Okay. But we're going to see a reduction in oil output for that reason. We're going to see some lost oil from Russia. And the relationship between Saudi Arabia and China says to the world that I'm not going to play your games anymore. Okay. And so I think you're going to see an even higher curve of production. And China doesn't care, because at the end of the day, even if the Middle East OPEC plus curbs output, China's going to be insulated from all these things. And China has, and because China was able to foresee this happening, they have a lot more influence than you realize. I think China is going to want oil prices to increase for everyone else so he could flourish during this time. I mean, India, they were more insulated from oil prices than any other country because they were prudent about buying oil from Russia, regardless of what the West and all the sanctions were saying. Well, China is doing this very thing because China knows, I mean, you look at America, we became a world superpower because of oil, because we had cheap energy and we pegged the oil to US dollar. Well, that's going to reverse, guys. The de-dollarization, what the petrodollar has done for US dollar, we're going to start seeing a reduction in that because they're going to be buying Saudi oil in the yuan, bypassing the US dollar, because they know Saudi Arabia has a tremendous amount of US currency, and they know what's happened to Russia. I mean, their assets were frozen. The central banks, their USD was frozen. Anybody buying and selling in USD, doing business with Russia, it was all frozen, and they knew they were next. And they're tired of the West controlling them. They're tired of being sanctioned, and they have to get away from the US dollar as fast as possible. So Saudi Arabia is starting to close deal in other dollars versus the US dollar. This is going to cause even more inflation. And even if oil demand and oil production doesn't change, even if oil prices stay where they are, you're going to see an increase in oil prices simply because we're going to have to trade more dollars for the very commodity. And we are not even seeing an increase in oil prices because of inflation yet. And so fundamentally speaking, it just doesn't make sense. If you look at oil prices, back in December of 2019, oil prices were $70-something a barrel. All right. This was during the time we had an oil glut. This is during the time that we had record amounts of oil production. Okay. February of 2020, March of 2020, we were producing 13.1 million barrels a day, the most in U.S. history. We've never produced more oil, and they were saying that there was no end in sight. Okay. Oil prices during December at $70 oil. Okay. And then we had the pandemic. And so then they crashed because Russia and Saudi Arabia decided to flood the markets with oil. Okay. And so we had the pandemic, we had an oil glut, we were producing record amounts of oil, and OPEC was doing the opposite of what they're doing today. They were flooding the markets with oil. Okay. Fast forward to today, oil prices at $70-something a barrel makes absolutely no sense. We have OPEC plus curbing production. We have the EU embargo. We have the EU price cap. We have the Strategic Petroleum Reserve that's ending. We've got a demand of oil. Our demand for oil is increasing. I mean, in India, may not be in America, but in India, it's increasing. In China, we're about to see it increase. Xi Jinping is getting ready to end COVID lockdowns. Okay. The COVID lockdowns was to manipulate oil so he could get a better price. It had nothing to do with COVID itself. It was to manipulate oil prices. And then he signs the deal. Now he's just going to lift the COVID restrictions. In fact, they're going to skyrocket in demand. We're going to see demand levels we've never seen before. I mean, you look at America, we consume almost as much oil as China, and we have almost a fourth of the population. Okay. So Xi Jinping knows that in order to increase in world dominance, you need oil. Listen, if you look at what we did in Vietnam, the reason why we were able to fund that war was because we started printing more money than there was gold. And that's what caused the world to realize, well, these guys are going against their original agreements and they're printing too much paper. Okay. That's why we ripped away the gold standard, because we wanted to be able to, we saw the influence and the power of being able to amass a massive military by being able to print as much money as we wanted. Okay. And so we found a way to be able to print money without being backed by gold, because gold is a limiting factor. You can only print as much gold as you have. You're not able to print as much money as you want. You're not able to churn out as many tanks as you want. Okay. In that scenario. But what they have done was brilliant, because they attached their dollar to a barrel of oil, because every time you sold a barrel of oil, it would increase the influence of America. It would increase the value of the US dollar. So we're not backed by gold, we're backed by demand. Every single commodity sold in the world, most of that is done in US dollar. That has allowed us to amass the largest military in the world. Xi Jinping wants that same power. And that's what's happening between the China and Saudi relationship. I mean, you think about it, Saudi Arabia, we imported more oil from Saudi Arabia than any other country. Now it's reduced down to 300,000 barrels of oil a day. In addition to that, we destroyed our relationship I mean, the things that Biden said about Saudi Arabia, that was the most ignorant thing. It destroyed the relationship. Saudi Arabia has turned their backs on America and has sided with China. China is the next global superpower. And I'm telling you right now, China is selfish and they are going to buy as much oil as they can, reducing the amount of oil for others. And it's going to increase the oil price for everyone else. And in addition to that, it's going to reverse what the petrodollar has done for U.S. currency. We're going to see more inflation, and it's going to cause oil prices to be even more expensive. It's going to make each barrel of oil produced in the U.S. even more valuable, and we're going to see a reduction in shale output even more. And the price of drilling is even increasing. Okay, the price of drilling is increasing, even though that oil prices are dropping. The cost of drilling continues to rise. According to IHS Markit, the average cost of developing upstream oil and gas assets rose by another 1.8%. The cost of drilling is increasing because we're producing less oil with each well we drill, because the premium shale acreage has already been developed. They were produced and developed too quickly. Fields that they thought were going to last for 10 years last for 12 months. America has the ability to print money like no other country. We thought we could print our way out of the lack of energy, and we can't anymore. We did it for years with Saudi Arabia. We did it with shale, and now it's over. Those days of cheap energy are over. And Xi Jinping is going to do whatever he can to keep oil prices high for America. Oil prices don't need to be low anymore. They don't need to be low anymore for the Middle East, for China, and it's time for oil prices to rise. I see the moons aligning. What didn't affect oil prices yesterday are going to start affecting them today. We're going to see the end of the SPR, the Strategic Petroleum Reserve, come end of this month. The EU and oil embargo has kicked in December 5th, but we're going to really see, and listen, we're about 30 to 60 days out to seeing how this actually affects the commodities. Okay, because it's always in the rear, and data is always being manipulated anyways. Okay, but at the end of the day, the confusion about what the SPR ending will do, the EU embargo, the EU price cap, the China COVID lockdowns coming to an end, and all of these things, it's all going to happen. And I'm telling you right now, we're going to see oil prices go to levels we've never seen before. Oil prices have dropped without the increase of oil. Okay, it's only a matter of time until oil prices start lining up with fundamentals, and it's going to be a mess out there. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.